Australia's deteriorating market drove Kaufland out. Let's have a look. Hello everyone, Florian Heiser here and welcome to another episode of Heiser Says. I thought we'd have a look at this article from The Age, discussing in a little bit more detail why Kaufland, one of the biggest grocers in the world, left Australia after investing over $500 million. I mean, it's not a sign of confidence for any of us, is it? So a deteriorating market, why Kaufland pulled the plug on its Australian dream. So the rapidly deteriorating retail market, coupled with trouble on the home front, have been nominated by one of Australia's most prominent retailers as the main reason for German hypermarket Kaufland's shock retreat from the country. And we can see this decline in the retail market expressed by the fall in consumer confidence and just the number of businesses that have gone under in the first few weeks of January. It seems every day we're discussing the retail recession, just a little bit more. So, former Myer chief executive and retail veteran Bernie Brooks told The Age and the Sydney Morning Herald a culmination of slowing growth at Kaufland's parent company, Schwarz Group, along with the bleak local conditions, drove executives to make the decision to leave. The massive multinational suddenly pulled the pin on its $500 million plans for growth in Australia on Wednesday, giving no reason other than to say it would focus on its European operations. Profit margin at Schwarz's Aldi subsidiary, Lidl, recently hit their lowest levels since 2012, and revenue growth at Kaufland has slowed significantly. Quite smartly, they're consolidating their efforts to fight on fewer fronts, launching a venture in Australia, which initially would be unprofitable, would have a further impact on their balance sheet, Mr. Brooks said. When Kaufland first started this venture about 3 or 4 years ago, they were performing very well, making more profits, but their world has since changed. It's like having a mortgage on your house, buying a holiday home, and then you find out that the house mortgage has gone up and you can't afford the holiday home. That's not what happens in Australia. Houses just always go up and up and up. It never goes down. And the Reserve Bank will just adjust the cash rate. Don't worry. It's probably not the best analogy to make, given the way markets are at the moment. So yes. Changes have also been occurring in Australia's retail sector. Mr. Brooks noted the industry is going through a restructure and is a deteriorating market. He also pointed to consumer confidence issues brought on by the bushfire crisis and ongoing concerns about climate change. Is climate change affecting consumer confidence? Is it? I mean, yeah. I guess, there's a whole lot of people that are scared. I think it's not necessary to be scared, but I guess that's my opinion. While it's an expensive thing to lay off 200 people and close sites that we're looking to open, it's probably a smarter thing to do than have a big haul of money that they're going to pour more money into over the next few years, he said. Just 1 week prior to its announcement, Kaufland had topped up its coffers with a $100 million injection from its German parent company. It had also spent millions on store locations, massive distribution centers, and 200 jobs with above-market rate salaries and significant perks. So they're doing what they can to attract people there. The company has not indicated its plans for its locations around the country, saying only that it would be discussed with relevant parties in coming days. However, sources have told The Age and the Sydney Morning Herald the company will complete the construction of its $255 million distribution centre in Melbourne's north, which sits on a 110,000 square metre plot and was purpose-built for the retailer. Kaufland is also likely to finish its build in Dandenong South, which it received approval for early last year. It will likely sell both sites after completion. A spokesman for the company said it was too early to confirm what would happen to each site which was being negotiated on a case-by-case basis. Commercial estate agencies, JLL's New South Wales head of retail, Jeremy Presto, said he was not aware of any deals struck by Kaufland in New South Wales for land to build its hypermarkets. The mature nature of Australia's commercial property market and scarcity of big 20,000 square metre sites favoured by the retailer made its business model difficult to execute, he said. Mr. Presto said Kaufland had been considering a different leasing model for its New South Wales expansion, taking over space occupied by Big W and shopping centres before it pulled out. It seemed Kaufland was coming to the party on perhaps being attached to shopping centres, but nothing had been transacted, he said. But while consumers might be disappointed they're missing out on a new rival for Australian major supermarkets, Coles and Woolworths are set to benefit from the news, according to analysts. JP Morgan's Sean Cousins labelled the company's departure as a significant positive for the industry and predicted Coles and independent supplier Metcash would benefit most from the news. The entry of Kaufland would likely have exacerbated the market share losses for Coles, especially as well as Metcash supply independence. This is no longer the case, providing upside to Coles and Metcash in our view, he said. So there you have it, guys. We have an interesting additional take on what is going on here with Kaufland. I mean, that's a significant amount of money to, well, it's a sunken cost fallacy that they've avoided. They've invested a whole lot. This is going to be additional competition. They were searching for venues all across Australia. We can see here from, here's the message, an updated one. In light of Wednesday's announcement of the common withdrawal of Kaufland from the Australian market, please be aware that we are continuing to trade as normal until further notice. Our current focus is on looking after our Australian team. We will be in contact with more information, including about invoices and contractual arrangements as soon as possible. So let's have a look at this media release that they issued. So, after careful and thorough consideration, Kaufland has decided to undertake an orderly withdrawal from the Australian market. The company will be concentrating its business on its European core markets in the foreseeable future. Kaufland's 200 Australian employees were informed of the decision today, with an assurance that generous packages, including all entitlements, will be offered as part of a thorough support and consultation process for all. The future of Kaufland's existing Australian investments, including properties purchased for retail outlets and distribution infrastructure, will be discussed with the relevant parties in coming days. The decision is about focusing business activities in Europe, and it is no way a reflection of the efforts of our local employees or management or the support Kaufland has received from the Australian business community or government. Frank Schumann, acting CEO of Kaufland International, said, "This was not an easy decision for us. We always felt welcome in Australia. We would like to thank our employees, and we apologise for the disruption this decision will cause. We would also like to thank our business partners for offering us great support over the last few years. We'd also like to thank the government for being very open-minded to our projects. In Europe, we see a great deal of growth potential. We will actively shape the consolidation of the European retail sector, thus further reinforcing our leading position. Kaufland is currently operating in Germany, Poland, the Czech Republic, Romania, Slovakia, Bulgaria, Croatia, and the Republic of Moldova, with roughly 1,300 stores and 132,000 employees. So there we have it, everyone. Kaufland has exited the Australian market, and it's not looking particularly good as, well, just as a sign of Australia's consumer confidence and where retail is going to be heading this year. What do you think, guys? Do you think this additional insight that the financial situation for Kaufland and potentially the economic situation in Europe and Germany is affecting this business and is having an impact here in Australia? Do you think that's more of a driver, or just the declining consumer confidence here in Australia, a slowing GDP growth, dreadful wage growth, ludicrously low cash rate, and plummeting job ads. Do you think that may have affected their decision as well? Anyway, guys, please let me know your opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan and want to support us, we have Patreon where you can make a small monthly donation. We also have the ability for you to join the channel here on YouTube where you can get access to emojis and badges. We have affiliate links for Independent Reserve for your commercial crypto trading, and Amazon and eBay for your consumer purchases. We have Pocket Squares as handmade merch on our own website. And finally, PayPal if you'd like to contribute that way. Thank you to everyone who helps support the channel. It allows us to keep going and buy new equipment and invest in stuff, and I really appreciate it. Thank you all very much. Take care, and I will talk to you all later. Bye for now.